Okay, trade recap. Um, so I took this short. So let me start off with the daily bias. Okay. On the daily time frame, so this was the Wednesday's candle, and on a weekly time frame, my weekly analysis was bearish because we have this weekly range, okay? We have this low and this high, and then prices engulfed and closed below this bullish fair value gap. So that's a significant sign that price is gonna go retrace into these weekly order blocks and this fair value gap and fill into this equilibrium. Okay, so my like whole weekly bias for the day is bearish, and Wednesday likely can be a expansion day. Okay, so nothing to do with daily. Okay, in a daily time frame we broke structure to the downside, so that means in a weekly time frame we are retracing lower. And on Monday, Tuesday was the Judas swing move to this range equilibrium, um, right here. Daily high to daily low, equilibrium was right hit and then pushed lower from, these this daily fair value gap, and then price just dumped to the downside, and we have these targets, these accumulation area right here, these accumulation area, and prices got into it, show rejection, but no, higher time frame bias is retracing. So yeah, so my bias was bearish. Okay, in a 4-hour time frame, we have this huge daily opening gap on Wednesday. So price can retrace into that, but I wasn't expecting that. Okay, so 4-hour, we broke structure here, broke structure here. So 4 hours was bearish. And 1-hour time frame, we was bearish, of course. As you can see, low gets broken, this low gets broken, this low gets broken. Okay, so the trade that I took was, yeah, okay, so we have this bullish SMT on Nasdaq and ES. So ES actually made a higher low, and Nasdaq made a lower low and actually swept it. So I didn't believe that I didn't believe this bullish SMT because there was no point for ES to drop this low and go higher without getting this previous week's liquidity low. That is highly unlikely to happen. And in a 5-minute time frame, this is where my trade goes on. So right when the market opened, so this is the time window, so 9:30, which is New York Stock Exchange opening on indices, and 12. So that's just a random number. That this is my training window. And bullish SMT, I did long on NQ. So if you want to watch that trade recap, go to my YouTube and watch it. Okay. I actually took long on Nasdaq and take some partials off here, on NQ right here. Mm, yeah, right here. This is the same. This line represents previous week's low, and this is the trade that I took. Okay, so what I learned was that New York Stock Exchange opened and just like dumping lower and lower. Okay, and the trade that I took was price retraces into this 15-minute Ferrari gap and 1-minute confirmation, 1-minute break of structure, 1-minute bearish SMT, and then long it. I mean short it. Okay. So what I noticed was that when Wednesday was actually expanding lower, expansion to the downside. So I just forgot about my bullish daily bias before the market opened. And yeah, we were dumping prices continuously, disrespecting this bullish SMT, prices dumping lower. And once price got into this 15-minute bearish Ferrari gap and did a bearish SMT. On ES, we made a higher high. On NASDAQ, we made a lower high. So, and plus, we made a 1 minute break of structure to the downside. And then I just entered, you know, take some partials off at this low because price can reverse and then hit my stop loss and then still even continue, or price can like, swap it, retraces into this, hourly range equilibrium or wherever. And I took something off there, and the rest of the position I just let it run. Why? Because in a weekly time frame we were retracing. This red line represents the accumulation area in a 4 hour, all of the 4 hour equal lows, and this is the weekly range equilibrium. Okay, so I could have like, mm, if I was being more rational, I could have just let it until run. Why? Because this is a weekly equilibrium and weekly Ferrari gap is right here, so even could have been done this. Okay, but I wasn't greedy at the time, so ended up taking 127 point, I mean 127.8 risk to reward trade. Okay, yeah, that's pretty much it.